Hello everyone to another intrinsic analysis video. Today we'll talk about the Bank of America stock, ticker symbol BAC. In the first half of this video, I will go over the argument for why I think this investment is risky, and then present to you another argument that despite the risk, this stock might be a good investment. But before we do any of that, please let me remind you that this video is not financial advice and for entertainment purposes only. First, let's go over why I think this stock is a risky investment. The reason is that the unrealized losses for the debt securities have grown since 2021. This is the last annual report. In the debt securities section, we can see that the unrealized losses are about 113 billion. This means if there is a run on the Bank of America will have to liquidate these securities and realize this huge loss on the income statement, and possibly not able to give back all the funds to their account holders. But if the bank waits until all the debt securities mature, Bank of America will receive the full 867 billion cost of the debt securities and will not lose a dime. Because this 113 billion is just the difference between what they paid and what they will get if they sell it today. But if they don't sell it, then they are good. This number unfortunately continues to grow in 2023. In the third quarter report, the unrealized losses is about 136 billion. When we put all the unrealized losses from 2017 in a graph, we find that it started in 2021, it was about 5 billion, then jumped to 113 billion in 2022 and 136 billion in the third quarter of 2023. To be fair to Bank of America, the unrealized losses in the 2023 Q3 report are only 4.3% of the total assets. But that doesn't mean that the stock price will not take a big hit if Bank of America is forced to liquidate the securities. Now let me present to you why I think this stock might be a good investment. When we look at the free cash flow graph, we see that finally the free cash flow is positive in the third quarter of 2023 after being negative in the last 2 years. In my opinion, this is like the light at the end of the tunnel and could be the reason that increases the stock price in the future. Now it's up to you to decide if this company is too risky or an investment opportunity that you want to consider. And by that, let's go over the complete analysis. Starting with the 2022 revenue segments, 55% of the 2022 revenue is from the interest income and 45% is from the other services. Geographically, 87% of the 2022 revenue was generated in the United States, 5% in Asia, 6% in Europe, Middle East and Africa, and 2% in Latin America and the Caribbean. Checking the growth of the revenue, interest expense, and net income over the past few years, the revenue decreased a little in 2020 and 2021, but in 2022 and the first 9 months of 2023, the revenue is growing, which is good news. The interest expense is naturally growing along with the revenue, and the net income fluctuates a little bit. Keep in mind that the 2023 net income in this graph is only for the first 9 months and not for the full year of 2023. In my opinion, it is possible that the 2023 full year net income will be even more than the 2022 net income. Moving on, the debt is 10% of the total assets, and we don't have to worry about it because the structure of the banks, they borrow to lend to their clients. But the thing that's really worrying is the unrealized losses in the debt securities that Bank of America invested in. In 2023 third quarter report, the unrealized losses is 136 billion, which makes many investors worried that the same scenario for Silicon Valley Bank could happen to Bank of America. But if no one panics and account holders keep their money in Bank of America, then in a few years all these securities will mature and the bank will not realize any loss. Moving on to the outstanding shares, an amazing job was done here because since 2018 the bank bought back about 24.5% of the total outstanding shares, which is one of the highest buybacks I have seen so far. Moving on to the dividends, yes, Bank of America is a dividend company and the dividend yield is about 3%. Now let's move on to forecasting 2023 numbers. I'm using the total assets turnover ratio to forecast 2023 revenue, 13% free cash flow to revenue ratio, and the outstanding shares in the last quarterly report, and 5% return investment ratio. These forecast keys will give us about $1.60 free cash flow per share, making the intrinsic stock price $31.95, which means it's about 11% undervalued. But in my opinion, 5% doesn't capture the actual risk due to the unrealized losses on the debt securities. So if you ask me what is the return investment ratio that I feel comfortable when getting into this investment, I would say 20% to return all my investment principal in 5 years, which makes the intrinsic stock price $8. This means that the stock is overvalued by about 256%. I'll be honest and say this analysis was challenging, and I hope I was able to provide you with at least a good background information about where this bank stands in the world of investment opportunities. Thank you, and see you in another analysis video.